Happy Friday. Great news out this morning for mortgage rates, and that is the non-farm payrolls came in this morning and 73,000 jobs were created. The market expected 110,000. So it's not like that's a huge deal in and of itself, but what was a huge deal was revisions from the previous months. So previously, we had 139,000 jobs created in June. That was cut all the way to 19. And the month before that, from 147 to 14. Some really dramatic revisions as far as how much jobs are coming out of the private sector of our economy. So why that's good news for interest rates? Well, that allows the Fed to be much more dovish. And of course, our Fed has been known for being hawkish. And now, instantly, we see the market pricing in an additional 0.25% rate cut this year. And immediately, interest rates fell across the board. So mortgage rates dropped about 0.25%. They were at about 6.8. Now the national average is closer to 6.6. And it is possible even getting down to that 6.25, 6.3, maybe with a little bit of points, depending upon the loan type and the financing situation. So great news, and hopefully that trend does continue. Part of the reason mortgages are better right now, in addition to this non-farm payrolls report, is the mortgage spreads keep improving. So what that means is the spread or the distance between the 10-year treasury and mortgage rates keeps improving. It was as high as 3%. That's a huge gap. That was when interest rates were close to 8%, but it keeps continuing down. It's right around 2.1% right now. Normal's more like 1.75. So if we can just get a little bit more love from the 10-year treasury and a little bit better mortgage spreads, we're really getting close to that 6% interest rate. So thanks for taking the time to watch this video. If you have any questions, give us a call. Happy Friday.